My trading 212 portfolio hasn't really got that much love this year, and the last time we did an update was back in July, on the 23rd of July, when my portfolio was valued at £4,057. Since that last update, I have actually invested £140 into this portfolio. Nothing much, but just to keep it ticking over. But as you'll find out in a moment, the portfolio itself has declined fairly substantially. This is in line with stocks like Alphabet, Apple, Tesla, and Amazon, which all make up a fairly large proportion of my trading 212 portfolio. So something I'm consciously going to try to do within this portfolio throughout 2023 is increase the weighting towards UK-based dividend payers. And that's to make sure that I'm fully diversified and not just doubling up on the holdings that I have within the S&P 500. Don't get me wrong, Amazon, Apple, Microsoft are going to be here to stay, and I completely trust in them. But I do feel like I could be missing out on some dividend payers within the United Kingdom. So please let me know in the comments below if there are any UK-based dividend-paying companies that you think I should now include in my trading 212 portfolio, and we'll see how things develop in 2023. But without further ado, let's hop into trading 212 and see where my portfolio is now valued. Bearing in mind the last update, it was £4,057. Here we are then inside my trading 212 portfolio. The markets are still open, so there is the potential to be some minor fluctuations, so just bear that in mind. But the overall value of this account is currently £3,789. So that has fallen by almost £300 since the last update, and I've added an additional £140 to this account. So it really has been battered over the last few months. The portfolio is currently returning to me about 12.5%, or around £425. So not to be sniffed at, but not quite as good as it was perhaps a few months ago. See, Alphabet, I hold 3.6 shares. I'm currently down 11.7%. If we come over to this side and click on return over here, you can see that actually the gain and loss is a lot worse than that, and it's just this FX impact that's kind of saving me a little bit. And what you'll find is that as we go through, I won't show you all of them, but the currency exchange rate is actually what's propping this portfolio up at the moment. Alphabet, like most tech stocks, have had a bit of a torrid time, down 12.5% for the last 3 months, down 37% on the year. We've then got Amazon, which has really fallen from grace this year, down around 50% so far. I've lost almost £100 in my Amazon position, which is around a 34% loss. Holding just over 2.5 shares in Amazon, and as you see again down here, you can see over £100 loss from capital growth, or capital loss in this case, around 41% pullback. But the FX impact is slightly propping me up again there. We've got Apple, which is holding strong, up around £47 or 16.3%. Again, Apple down 22% so far this year, in the last year, but not as bad as some of the other tech stocks that we've seen in the space. Currently holding 3.1 shares in the company, and again, you can see here, because I've held Apple for so long now, it's not actually dipped all the way down to kind of my average. So I am actually up from both a gain loss and an FX impact, which is quite nice. AT&T down around 33% with a loss of £67. And it's down 25% this year, but we know it's not been doing too well consistently for the last 2.5, probably 3 years really. It's a bit of a dying company potentially. It does still pay a nice dividend. I currently hold about 9.5 shares in the company. You can see again over here, gain and loss is kind of worse, but it's the FX impact saving me again. Still paying a dividend of around 6%, so that is still yielding me some income into my portfolio. But I might have to look at whether I continue to hold this one for the future. BAE Systems is a defensive stock, so it has done particularly well out of the Russia-Ukraine crisis. Obviously, we don't want to be doing well because of a war that's going on, but this stock has performed particularly well. I'm up almost £100 in this position, and it's up almost 77%, holding currently 27 units of this investment position. I have actually sold out of some of these to crystallise some of the gain to then reallocate the funds, but it is just worth thinking about actually how long it's going to hold this gain, and is this a good price to start to sell some of those positions off at. The reason I'm a little bit sceptical of doing that is because of the dividend that it pays. It pays a dividend of 3.04%, but I am, like I say, considering selling not the whole position, but maybe a quarter, maybe 6 shares here, just so I can reallocate some capital to some different positions. Over the last 3 months, it's up around 9.5%, and over this last year, it is up around 60%. We've got Coca-Cola, a Warren Buffett favourite, up around 33%, netting me a gain of £75. And again, it's actually done fairly well this year. It is up 9.28% so far in the last year. Over the last 3 months as well, it's up 5%. So it's actually done a lot better than the S&P 500 and some of the other indexes out there. The return, again, is positive in both senses, and it also nets me a nice little dividend, just under 3%, but still a nice bit of income into this portfolio. Currently holding over £300 in value in this account. Can't really complain. A Warren Buffett favourite, like I say, for a reason. The iShares Global Clean Energy up around 5%, or just under £9. It's one of those stocks that kind of bounces back and forth. It kind of does whatever it pleases, really. I'm just above the position where I have averaged in at, and this is one that I think could be really, really strong for the future. Johnson & Johnson, another all-rounder, done all right this year, still up around 5%, which again is in the face of the rest of the index and the rest of the market, so not doing particularly badly at all. Holding just under 1.5 units of this position, and again up for both gain and loss, and a little bit of FX impact there as well. Again, a nice little dividend pair, paying just over 2.5% into the portfolio. And again, a slightly defensive stock here, obviously in the healthcare industry, which is always going to be needed. So another real top performer there for me. Overall, up just under 25%, which is about £40 in net gain. Microsoft is again one of those tech companies that's been hit this year. Over the last year, it's down 25%. Last 3 months, it's kind of traded sideways. So again, not done particularly well. Probably one that if you invest cash in now, you'll reap some rewards in the future. I'm still up around 8% or £20, holding just over 1.3 units of this fund or this position. And again, pays a very small dividend at 1.11%, but gives some nice little income into the portfolio. Now, Microsoft is used internationally by all businesses, all education providers, most places in the world use Microsoft products. Obviously, it's got Xbox, it's trying to buy into the metaverse if that's ever going to be a thing. So yeah, one to watch for the future, definitely. We've got Nvidia, which has taken an absolute pummeling over the last year, down 41%. I'm currently down 17.5% or £21. Pfizer, I'm up 43% in Pfizer, largely because of when I bought in and obviously the COVID jabs. But this year it is down just around 16%. But yeah, still pays a nice dividend of 3.19%, which is nice to come into the portfolio every now and again. Realty Income is a investment position that I really, really like. It pays a monthly dividend and it's obviously in real estate. So this is one that I really, really like. It is down 6% over the last year, but again, that's doing a lot better than the overall market. I'm currently up around £25 or 9%. Rio Tinto is one of those UK dividend payers that I'm going to be looking to potentially invest more of my capital in the future. I've up around 12% or £14 since making this investment, and I was fortunate enough to actually invest in it right around here, just here you can see. So I did drop down, but it has now started to climb up again, which is seemingly quite a nice little bit of profit. Shell obviously posting record profits this year. Not too many people who are happy about that because of obviously the energy crisis that we've got at the moment. Me, on the other hand, I'm an investor in Shell, so it's not a bad thing for myself. Whilst it hits my energy pocket, it is good for the dividends that I receive here. It doesn't unfortunately show you the average price that I bought in because of the changeover from Royal Dutch Shell to Shell, which is a bit disappointing. But I did invest a lot of my money into Shell when it was valued at around £10 to £12 per share just after the COVID crash. So I'm probably up around 80–90% in this position, which is really, really pleasing. Starbucks, I'm now back positive again. I'm up 3%, around £5, but this year it's down around 10% as a total. I hold just over 2 units of this position, and again it pays a dividend of 2.15%, so a fairly nice dividend for a US based company. We've got Tesla, which has been the talk of the town recently, hasn't it? I was up at one point over 100%, 120% I believe within this position, and it has absolutely tanked, obviously with the news that Elon Musk has bought Twitter, and the fact that he's selling large quantities of his Tesla shares has caused people to start to doubt the company and start to fear that people will pull their money out of Tesla. Me, on the other hand, I fully believe that Tesla will be a company that will be here for the future. I'm just down 2-ish% there, so I've lost around £6 in this position. I currently hold 3 shares of this company, but again, this will be one that in 30 years' time, I strongly believe will be back to its all-time highs, if not higher. And then finally in the position, we've got Unilever, up actually 4% so far this year. So not done too badly when considering the overall stock market. I currently hold 4 shares in this company, again up just over 3.5%, and again another UK dividend paying company paying 3.51%, which comes into the portfolio quarterly, so fairly nice. So we can have a look at the allocation. I currently hold 17 investments in this portfolio, and again you can see Tesla's the largest one with Apple second, but if we consider Apple, Microsoft, Alphabet as some of the largest positions within my ISA as well, I think I do need to consider actually, am I fully diversified here? So that's why in 2022 I am going to look to invest more cash into this portfolio, but invest it in UK dividend paying companies, and that might be something that I look to do across this entire portfolio. And whilst we're on the topic of dividends, I've now held this account for just over 2.5 years, and I've made £128.43 in dividend income on this account. So there we have it then, a quick breakdown of my Trading 212 portfolio, which is currently sat at £3,798, and some of my plans for this portfolio for the future. If you haven't started using Trading 212 already, now could be a really good time to get started. It's really, really simple, and if you want to sign up using my referral link, you will get a free share when you sign up and fund the account, valued up to around £100, which is really too good to miss. So I'll pop the link down in the description below for you to sign up and get your free share. If you do want to check out my other portfolios though, you can check my Vanguard December update here to see how my ISA is getting on. And if you want more information on the capital gains allowances and dividend tax allowances, you can check out in this video here, which will say why dividends are going to be so important in 2023.